Hi everyone, hope you're all doing well, and today I'm going to make a video talk about Chinese stocks and the Chinese stock crash that's currently going on. There's a lot of stocks out there, whether you look at Alibaba, Tencent, JD.com, Huya, a lot of the Chinese stocks are going down in huge amounts, and yes, it is a crash. You know, a crash is normally determined by a 20% drop in the share price, and yeah, a lot of these stocks have definitely dropped more than 20% at the moment. A lot of them are down 30, 40%, and yesterday I made a video talk about 3 stocks I'm buying, but when I made that video, I very nearly, quite a few times, ended up doing a like 10-15 minute talk about Chinese stocks and everything like that, and I thought, nope, today is actually talking about deep dive into the company, why I'm buying the companies, even though it had something related to that and the reasons why it's dropped. For example, I didn't want to get into yesterday's video talking about Chinese stocks too much and my thoughts on them, so I thought, you know what, best thing to do is do a video today doing a deep dive, talk about this Chinese stock crash that's going on and everything, and my thoughts on the current situation, and go from there, because yeah, I nearly ended up hijacking the video quite a few times yesterday. I had to like stop the video a few times and go, nope, think about what you're doing, 3 stocks you're buying, don't get talking about Chinese stocks too much. And today we're going to get onto all of that, so yeah, we're going to cover it all. And just a quick note to say thank you so much for smashing the like button yesterday. I didn't make it a big kind of deal, but it was actually really smashed, so thank you so much. But yeah, before we get onto this, if you do want to join the Patreon, the link's in the description. If you are a Patreon member, there's a 45-minute live stream Q&A that is on there, so if you do want to watch it, the repeat is on there, so go check that out. And if you do want to start investing, there's some links to some brokers in the description. But yeah, starting off, talk about these Chinese stock crash and everything like that. So first of all, the first point I want to make, and a little bit later on, obviously I own Chinese companies, so what I'll get talking about probably will be a little bit more biased, that I am bullish on Chinese stocks, especially at the current prices. But before I get onto that, and I will be a little bit biased, obviously, because I'm invested in the companies, but I just wanted to start off with a neutral point of view here, and this is the big thing that I want to talk about, and I started talking about this yesterday, about the right mindset to be in. So the right mindset to go into this Chinese stock crash here right now is just like everything in the stock market, is that when you're investing into the stock market, what are you trying to do? You're trying to make money into stocks, okay? We all agree, we're all trying to make money into the stocks, right? The best way to make money in the stock market is to be buying great companies at cheap prices. You want to be buying a company or a stock that is currently $100 that should be $200. That is the best way to make money. And quite often, the way that you're going to do that is when the share price isn't reflecting what's going on with the company, is because of bad news and maybe an overreaction or people overlooking something that's happened, something like that. That's the main thing you want to do. Now, what you can do in the stock market is you can buy a $200 stock for $200, and that might go up, but you're probably going to stay in line with the market. But the thing is, as an individual stock picker, is that you want to buy the great opportunities out there, and the great opportunities are the ones that the share price isn't reflecting the company, and quite often that is caused by a dip, or the dip is caused by bad news. And that's the big thing you got to remember, because quite often what I see is people go, you know what, I'd love to buy Google, I'd love to buy Facebook, I'd love to buy Apple, but they've got to remember, you know, you're not going to get them free companies unless something comes out, you know, if bad news comes out. You know, if you take the stock crash in 2020, for example, when we had that stock crash, you know, we had a massive pandemic in the world, and people were like, oh, you know, how serious is this actually going to be? And because of that, you saw, you know, the share prices absolutely slump on them companies. And if you bought in them, you saw the rewards, because you thought, you know what, the pandemic is going to be bad, but realistically, 12 months down the line, 24 months down the line, where are these companies going to be? Are they not going to be around anymore? Or will they go back to where they were, and then even after that carry on growing profit and revenue, which we're starting to see right now? And that's what happened. And if you bought in them dips, you got the rewards, and you got the rewards of buying on the dip. And that's the best way to make money. You've got to kind of assess every situation, and if you think the share price is overreacting and gone down way too much, buy it, and you probably make good money on it. And that is the best way to make money, and that's the best way to make money as an individual stock picker, and that's what I try and do. I try to look for overreactions, buy them, and make good money, and that is always the best way to make money on the stock market. Now, don't get me wrong, there's going to be examples where stocks report bad news, bad earnings, and if something fundamentally changes with the company, you've got to actually look at that and go, actually, you know what, that share price drop actually reflects what's going to happen with that company, because it's not going to grow profit and revenue, you know, further down the line. It's going to struggle from now on because of that effect of whatever's come out has changed that company. But if it's something that you actually look at the company and go, realistically, is that going to actually change anything? Is that going to change how the company's going to grow in the future? Then you're probably looking, thinking, this is actually a buying opportunity then. This is an actual gift. And the one thing that I also see is like people kind of go, oh, I want them dips on Facebook, Google and everything like that. But they've got to realise you don't get that dip on them companies without bad news. And then the bad news comes out and you see quite often people go, oh, actually I've seen that bad news and I don't know if I want to buy that company now. And people get scared when these bad news has come out rather than actually reflecting, okay, what does this mean for the company in long term? And this is what I want to go into today's video is like, I'm obviously going to be biased in this video and say that, in my opinion, I look at a lot of Chinese companies and think these companies haven't changed much further down the line. They haven't fundamentally changed. The revenue is still going to grow, the profit's still going to grow, they're going to be great companies. However, if you're in the situation where you're seeing this news right now and you think, oh, you know what, I actually think, there's a lot of problems here with China. I feel like these companies are going to struggle to grow profits now, and they're going to struggle to grow revenue now. This is an opportunity that you don't want to be buying, and that's fair enough. And that's what I kind of want to put. I don't want to say my opinions and then say I'm right and you should follow me into the situation. Don't listen to me. I'm just a person on the internet recording a video in front of a whiteboard. But try and look in every situation here and think, is this an overreaction? Are these companies going to be fine in the long term? Or okay, there's a major problem here. If there's a major problem here, don't buy the companies. But that is the best way to make money, is to buy companies on the dip. And if you think the companies are sound in the long term, then the best thing to do is to be buying them dips. So that's the first thing I wanted to make very clear starting off with this video. So what I'm going to do now is I'm going to go across and look at Alibaba, because I think Alibaba is definitely the stock that pretty much, with this Chinese dip that's going on, there's a lot of companies on sale, JD.com, Huya, Douyu, Tencent. But I think a lot of us, most of the people that I've seen are looking at picking up Alibaba, which obviously is probably one of, if not the best or the giant of the Chinese stocks. So it does make sense that if you wanted probably one of the more safer plays in this sort of industry, you're looking at Alibaba, and that's the one that everyone's going to talk about. So we're just going to use that one as a little bit of an example right now. So as you can see, it's down in pre-market here. It's actually down at 184. So yeah, that's what's going on with Alibaba right now. And yeah, once again, a rough day yesterday. But if we just go into the stock price, for example, so you can see here, this was the highs, and then we've gone down a bit, lost 38% of the value. And this is what I'm exactly talking about, is like, is this a fair reflection? Has something changed with Alibaba to justify a 38% drop in the valuation of Alibaba? And once again, if you look at the share price, we're back here where it was in the peak of CV, when we didn't know how serious this pandemic was, and we're even back here, some prices that were back in 2017, for example. So we've had a big massive drop, as you can see. Now, just from a valuation point of view, is if I just flick onto here, P ratio, you can see we're sitting at a 23 P ratio, and that is pretty much the lowest it has ever been. The only time we've been slightly lower is when we've had a few little drops here in the share price, but it was only slightly down there, but pretty much then it rebounded to 24, sitting around 28, 23-ish. So yeah, this is pretty much the lowest that Alibaba has been for a very, very long time on a valuation point of view. And if we go onto a price to sales ratio point of view, you can see here, once again, we're down here at a 6, and yeah, once again, it's the lowest it's ever been. The only time it's been quite close to that was once again towards this period of 2018, and 2018 was a very similar time. If you kind of don't really remember this period, if I just flip back to the share price here, this was, once again, there was a lot of negativity about Chinese stocks being delisted, a lot of China trade war tensions, very much what's similar going on right now. And if you look to this dip here, if we just go from the highs down here all the way down here, the stock dropped 35%. Now, if you bought somewhere in this period of this dip, you were up once again, over 134%. And that's just a prime example. Once again, this was a period very similar to here, where there was a lot of bad press coming out of this company, and then boom, we shoot straight up. So if you kind of thought, if you were in this period here, very similar to where we were before, and I was one, I made very good money off this, and as well as JD.com, is I kind of looked at this and thought, what, this doesn't reflect the company, and boom, the share price went up. And this is very much similar to what we've had already. This is kind of like a bit of history repeating itself. It's happened before, and you've just got to kind of look at the situation again. And what you're kind of seeing is, once again, the share price, the valuation is dirt cheap. It's the cheapest it's ever been. You can't argue that Alibaba is a cheap valuation right now. And once again, you got to look at that kind of thing like towards 2018, when they were selling off last time. And back in that period, I was like, oh, nothing's fundamentally changed with the company. The share price recovered a little bit later on. And you got to look at the same again. You can't argue that valuations are cheaper than cheap right now. They're the cheapest it's ever been. And once again, you've got to look at the situation and go, okay, this company is dirt cheap. You can't argue with it. It's the cheapest it's ever been. Is this company going to be good in the long term? Has something fundamentally changed with the company? And you've got to look at this opportunity now and think, if you think something's changed, you don't buy it. If you think this company's sound in the long term, this is a screaming buy. And that's obviously clear to what you can see right here from what we're seeing. And really the big recent slumps in the share price is one caused by Didi, which was one, they kind of like didn't do the correct paperwork to come public, and a lot of the Chinese stocks get punished. You see this quite often is once one Chinese stock gets wrong, does something wrong, they all get punished for some reason, which is really weird. So this came onto the stock market, didn't fill in the correct paperwork. China said, oh, we're not having that, even though China gets like battered for saying like, you know, they're not, apparently they don't do things legit and everything, and they do things legit and go, hold on, you can't go into the stock market without doing the correct paperwork, we're going to delist you or anything like that. And everyone goes, oh, they're delisting people again. But realistically, this is just China going, look, we can't have you cutting corners. And a while ago, they got criticised for not being tighter on these sort of stuff. And then the whole stocks get punished. So that's one thing that kind of pushes it down. Once again, the media kind of pushing it out. Tencent went down after a monopoly of on the music rights. And then once again, everything gets punished, even though we've seen plenty of monopoly stuff in the US before and people cracking down. But obviously, China are a lot more tighter on this sort of stuff. And yeah, you know, this is something that we see very much in the US side of it. And once again here, we see like this education crackdown. And this is once again because the pricing was getting ridiculous and China went, we can't be having this. And they said, you can't do it. And, you know, I think this is really quite good from China, kind of just going, look, we're kind of, you know, in charge and you've got to make sure you play things by the book. And previously China being like criticised for not being playing things by the book before, which is really strange. And once again, you just got to kind of look at all this and go, how much does this actually kind of relate to like a stock like Alibaba? Does this sort of stuff fundamentally change Alibaba? Is this going to stop them from growing their profit and revenue? And I just look at this stuff and think this is just, you know, the US media pushing a lot of negativity out on a lot of these Chinese stocks when, in my opinion, a lot of what's going on in China is fair play. I think that what's kind of going on is fine, and it's them being quite tight on the regulations. And you could argue that, you know what, the US should be a bit tighter, and the US should actually take a page out of China's book and be a bit tight on some situations like here. I know people go, oh, you know, there's some, you know, dodgy things that go on in China, and there's a lot of, you know, them backhanders going on. And you know what, there probably is, you know, in the world of business there's a lot of that stuff going on. But it's exactly the same in the US. There's a lot of stuff down there in the US that kind of goes on. And I kind of picked a few articles out here from some of the biggest companies in the world that are just prime examples of that. So I got one here from, you know, probably the gem of the US stock market, Apple. You know, this was one story that was only recent, and basically, I don't know if you remember this, but Apple kind of admitted to going, you know what, if your iPhone gets like 2 years old, yeah, we actually do put updates out that actually just slows down your battery and kills it on purpose, so you go get a new iPhone. And this is the biggest company in the world pretty much saying, yeah, a product you buy, we pretty much make sure that it goes dead, so you go buy a new product. Imagine if this was a Chinese stock right now, and you know, what did they walk away with? $113 million fine. Now, I'm not being funny, but you know, that's Apple. That's what they probably spend on one staff night out at Apple. It's absolutely bonkers. And this is just a prime example of people think like, oh, Chinese stocks aren't squeaky clean. Welcome to a lot of stocks in the whole world right now. One of the big dividend kings, Johnson & Johnson, for ages, they knew they had asbestos in their baby powder and didn't do anything about it. And this is one of the dividend kings as well on the stock market of the US front. Facebook, we were talking about earlier about Tencent, and they were getting punished for having a monopoly. And it's quite good that they're actually cracking down on this. You know, what did the US try and do over the last 2 years with Facebook, with Amazon, with Google, especially Facebook? Facebook's, it might as well be a Chinese stock, it's that much hated. But yeah, I mean, they're trying to crack down on them on having a monopoly as well. And you know what happened with Facebook? US lost against it, and Facebook, you know, managed to keep all its platforms. But let's not play the US as this like squeaky clean companies here. You know, there's plenty around the world, and it goes on everywhere. That there's a lot of things going on, and it's one of those that the US media love playing up a lot of these situations when there's not that much going on or much worse going on in other countries. And I just thought that was a big thing to kind of make clear as well. And let's just go from the Chinese point of view, the Chinese government point of view, right? If they were to actually, they at the moment, I think they're doing quite a good job of just going like, just remember who's in charge here and making sure that you kind of play to the rule books. And Tencent and Alibaba have been very good for that. And they've kind of, whenever the Chinese government have kind of gone, you need to sort this out, Tencent and Alibaba all the time just go, yeah, that's fine. And they kind of allow that to happen. And it's actually quite a good respect that they're kind of going on. And I'm sure, you can kind of say it's a little bit shady as well, which is probably true. But you kind of have to know that the Chinese government show who's in charge every so often, which I don't think is a bad thing. The Chinese government want to have this a pretty decent reputation of actually being like in charge and making sure they're cleaning their acts up and making sure everything is legit. And realistically, how far would China push with that from like delisting companies from the US? They wouldn't, because it wouldn't make sense for them, because obviously it's good for their companies and they want their companies to do well, the Alibabas to do very well, and they have so much investment in the US and China, and if they were to take them off, a lot of money would be lost, especially with the whole ADR situation as well. You could kind of pull that situation in here, is there would be a lot of money lost, and there would be a massive outrage. If China was to pull a lot of these companies off the stock market and delist them, there would be such an outrage across the world, and we wouldn't be talking about, Alibaba's getting delisted. We'd actually be talking, in my opinion, about a massive financial crisis where there was a lot of money lost, and we'd probably have a big stock market crash in general because of all the US companies getting pulled off the stock market. And China don't want to punish their big dogs that much. It doesn't benefit them as a country, and that's what you got to remember. It's same from the US point of view. The US might show off a little bit every so often, and make it look like they're in charge. But once again, what US going to do? They're going to kick a lot of these Chinese stocks off the listing with a lot of their big investment hedge funds invested into them and lose a lot of money. It just doesn't make sense. So it doesn't make any benefit from China and US that it would affect the economies that much to kind of pull all these stocks off the stock market, because there would be so much money lost. And like I say, we wouldn't even be in this position actually talking about Alibaba's getting delisted. It would be the knock-on effect to the economies that we would have. All the investments would get affected. There would be so much money lost. It would just be a crazy situation. We would have a big financial crisis. So realistically, when we look at the worst case scenario, what is the most likely to happen? Or could it happen? I don't think so, because if it happened, I can't see it happening, but the consequences for both of them just doesn't make sense to follow through with it. And if they were to follow through with it, we wouldn't be talking about Alibaba stock. We'd be talking about pretty much every stock in the stock market losing, half its value because of the knock-on effect that it would have. It'd probably be one of the big financial crises that we would ever have in the world, and there'd be a lot of damage and reputation and just trade that would be damaged for years. It would not make sense for it to happen. So. Overall I just wanted to cover so many things really with the whole situation from the point of view of like just the mindset of a dip, kind of realizing, like in Alibaba, you definitely can agree it's the lowest valuation ever. Looking at the company and thinking, realistically, all these news articles, this fear that's been, all this FUD that's getting put out here, how much is this actually going to affect the company? Is it going to affect the profit and revenue in the long term? And even, worst case scenario, how bad is this situation? And how bad could it get? And once again, it just comes back down to how I open the video. And you look at a lot of these Chinese stocks that are out here right now, and you've just got to look at this situation and go, is this company still going to grow profit and revenue in the long term, or has something fundamentally changed? If you feel like after all this that something's fundamentally changed, fair enough. It's your opinion. I just share my opinion on here, and if you think like something's changed, you don't buy it. If you look at a lot of these Chinese companies right now, and you're thinking, these companies are still going to be amazing in the next few years, and they're at the lowest valuations they've ever been, you're probably buying them. And that's it at the end of the day. And I just wanted to make that video to clear that up. What I will say is just to be very careful that one thing that I will leave on, which is probably like a little bit of a negative note, is that one thing to make sure is that you never actually in my opinion, never have huge amounts of Chinese stocks in your portfolio, because unfortunately there will always be this little bit of negativity, valuations a bit lower than US companies, and every so often you are open to the US media being very negative to Chinese stocks, and they can out of nowhere Very much like anything in the stock market, pretty much slump a lot in the share price, and because of that you probably won't want to have too many Chinese stocks out here. But if you're looking at a lot of these opportunities now and you think, you know what, they're pretty good companies, are great valuations, then you probably will think, you know what, I can commit 5%, 10% to the stock market portfolio and buy a few of these opportunities out there. So yeah, I hope you enjoyed it. I hope it cleared a few things up. Let me know what side of the fence that you're on. Where do you sit with a few of these? And as you guys know, you know where I am with a lot of these Chinese companies. But I'd be interested to hear any of you guys' thoughts anyway. And if you could smash that like button and you subscribe, and I'll see you next video.